Hello, everybody. My name is Elise Hatton. I am Rockhampton Regional Council Smarter Business Manager, and it is my absolute pleasure to welcome you to today's Lunch and Learn. Now, as I say almost every single month, Rockhampton Regional Council and the Smarter, we're very focused on supporting people in business and people who are intending on going into business. And one of the ways in which we demonstrate the support is by hosting these monthly Lunch and Learns with topics that we believe will really add value to your business. So that's why we're here today. And thank you so much for joining us. Our intention is to add value to your business. And as I say every single month, your job is to take at least one action away from today's Lunch and Learn. If you can jot down one thing that you can go and do and implement in your business straight away today after our Lunch and Learn, that will help you be more successful, be more viable, more sustainable, more profitable in business. Now, our topic for today, I believe, is a really, really good one. And the topic was suggested by Adrian. Thank you so much, Adrian, for the great suggestion. And we're going to talk today about insurance. Now, we all know that insurance is one of those very necessary elements in business, and we do need to ensure that we are insured for the things that might go wrong and to mitigate our risk. Now, we have a fantastic presenter today, Nadine O'Hanlon from Piranha Insurance Brokers. Thank you so much for Nadine for joining us. She's a fantastic person who's been a broker for 20 years, so she is extremely knowledgeable and experienced in this area. And as I always say, I'm not going to repeat the marketing, so I want to tell you something that's a bit quirky about Nadine. And when I asked her that question, she said, well, I'll tell you something that other people find quirky. I don't find it as quirky, but she has 2 children, one aged 3 and one aged 3. So she really has spaced her kids well, and she started over again. And she's doing a great job at that. And she's also going to do a great job today at sharing around the insurance journey for us. So Nadine, I might hand over to you. Thank you so much for joining us.
Yep, great, thank you. So yes, hi everyone, and thank you for joining us this afternoon. So pretty much what I've chosen to do is just share some of the main insurance products and issues that I see affecting small business. So I'll just share my screen up here. There we go there. Is that working, Courtney? Yep, all good. Okay, so just to put out there firstly as well, so just pointing out that the information that we talk about today, it is all just general in nature. So I'm not considering whether anything is specific and appropriate for individual circumstances, financial needs and that sort of thing. So if you want to discuss anything particular around your circumstances, just reach out to me after the webinar and we can go from there. So yeah, they're just the topics from today. So I think that was on the marketing and emails that had gone out. So we'll get started. Okay, so the first thing, I guess when we buy insurance, we've got 2 main ways that we can go about it. So we can either go direct to the insurer or you can choose to go via a broker. So both are going to offer some different ways that you can purchase those products, whether it be online, over the phone or in person. The key difference between the 2 is that through an insurance broker, their foremost duty is to their client. So that's you, they work for you, not an insurance company. Insurance companies and their agents, they'll only be able to provide you with advice on their own products. A broker, we're not aligned to any one insurance company, so we can explore a whole range of products and services that are available. Important to note, when you do choose to buy your insurance directly from the insurer, it is 100% up to you to understand the fine print and make sure that the cover is right. So, and I guess it's not exactly an easy task, particularly in this day and age. We know that, there's thousands of insurance policies. They're offered through multiple brands, distribution channels. They're all different in their terms, conditions, benefits and exclusions. So it can be quite overwhelming. There's a wide range there, and it can be really tricky to work out which one is best for your business. So from my side, I see, using a broker. So using a broker, it's going to simplify the whole process for you. They've got expert advice. You've got someone on your team who can guide you through all the options and support you every step of the way. Like any other professional you'd go in search of for advice, brokers are highly qualified, they're objective, and they go through years of training and education. So simply, you should be saving time, money, and stress when you use a broker. So most brokers are going to have access to online tools, so they'll be able to very quickly compare and assess different products for you. So that saves you having to go out and do that. They'll review the cover, they'll review the insurer's claims paying ability, and they'll also do pricing comparisons just to make sure that the option that's put back to you is the best suited for your needs and is competitive. An insurer simply can't do that for you. So be aware brokers do usually charge a fee for their service, and they may also receive a commission from the insurance company. Fees are disclosed at the time of quoting and are payable only when you accept the cover. So usually if you approach a broker to get quotes, it shouldn't cost you anything to go through that process. So don't let the fee side of things stop you from seeking advice. So you're only going to pay those fees once you actually place the cover. The fees will change and will be quite significant. They will vary from broker to broker, and they are going to depend on the product that you're obtaining and the complexity of the insurance that you're looking for. Okay. Yeah, so even though they do charge a fee, it's not necessarily going to cost you more either. So in a lot of circumstances, brokers have knowledge of the market and can negotiate premiums on your behalf. So it's definitely worth comparing it. So have a look at that. All right, so if we choose that, yep, okay, I'd like to go ahead with the broker, how do you know who's a good broker? How are you going to pick your broker? So when searching for a broker, the first thing you need to look at is their professional status. So what you're looking for here is what's called a QPIB, or a qualified practicing insurance broker, or that they've got a CIP, which is a certified insurance professional. By doing that, you're making sure that they've got the experience and the qualifications to look after you properly. Consider if they're aligned with any professional networks. So here through Piranhas, we're aligned with Steadfast or CQIB. So what that does is that gives you enhanced policies. They've got higher limits and extra benefits to something you're going to get off the shelf direct from an insurer. And that means more money in your pocket come claim time. Also to mention there as well, some brokers do focus on particular business types or industries, and that can be beneficial for you as well. So they'll have specific products that are tailored around what you actually do. A good one for that is like the beauty industry. So beauticians doing injectables, that can be quite hard to find insurance for out in the market, but there are specialist brokers out there. So seeking someone out that's a specialist in your industry could be beneficial as well. All right. Moving on to property insurance. So it seems simple enough, I guess, property insurance, but the reality is 1 in 10 Australian small businesses with insurance don't get it right, and they don't have enough cover to protect themselves. So according to ASIC's insolvency statistics, the major reason why small businesses in Australia fail is inadequate cash flow. So this is where insurance, where having that right level of cover is critical so that your business can survive if the unexpected happens. So with your property insurance, very important to note, most business insurance policies will contain an underinsurance clause or an average clause. And in simple terms, that means underinsurance is when you insure for less than the true value of your property. So if we let that happen, we've got a big problem. So the first thing is, well, firstly, you're underinsured, you don't have enough to replace your goods. But secondly, you're going to be penalised by the insurer for being underinsured. So most policies will allow a percentage of variance in the difference between your replacement cost and your sum insured. So 80%, usually we have to insure up to 80% of the true value of the goods that we're insuring. This is a common problem that I come across, is where people do underestimate what the reinstatement value is of their business assets. So really important to have a look at that. You need to have a view of, if I lost everything and I had to replace everything in my business today, what is the true replacement value? My contents, my equipment, my stock, or my building. Don't insure from the assets on your balance sheet. This won't represent a replacement value. So there's usually depreciation allowed for in there. And, you know, you might be tempted at times to only insure for a percentage of your replacement cost. But by that, you're also electing to take on a percentage of the risk. So that means you're going to be majorly out of pocket come claim time. Righto, so let's have a look at underinsurance actually being put into play. So this is just a basic example for you, and just to show how it can actually affect your claim settlement. So we're looking at here, if we say, let's just pretend it's for a building for this one. So your business building is worth $200,000 to replace. So from the insurer's point of view, you need to insure it for at least 80% of its value. So that's $160,000. That's the minimum you need to have it insured for to avoid underinsurance or average clause. You decide that you're going to insure it for $144,000. So the way they calculate that, they'll go your sum insured divided by what your actual minimum replacement cost should have been times the amount of your loss. So if you had a $100,000 loss, you're not going to get $100,000. It's actually going to be proportionately reduced. So you're only going to get the $90,000. Okay, so yeah, important to really consider underinsurance. So there are ways we can avoid it. So I guess the key factors here, having a look at your sum insured. So as we mentioned, you know, making sure it's replacement value, not your market value. So I see that a lot in people coming to me where, yeah, they're making it on the market value. So definitely not when it comes to business insurance. It's not like insuring your car or your boat. They are market value. Business insurance is replacement. Never set and forget your policy. Always regularly review it. Yeah, and as I said, don't have a look at your accounting books and things like that, because that will be a depreciated value. Obtain a replacement cost valuation. So always recommend seeking some qualified assistance with getting your values right. So yeah, if you can get a valuer on board and get them to do that valuation at least every 3 years, you give yourself the best chance of getting it right. And then you're not over-insuring or under-insuring. You're getting it spot on. When you do seek out their help, make sure that they put costs in there like demolition, removal of debris, professional fees and council costs. So all that needs to be included in your replacement cost valuation. Consider business interruption. So what happens? You know, you have a major damage. What happens to your cash flow? So you've still got to pay your bills and you need to survive. So business interruption, it will come into play. It'll cover your lost profits and your additional increased costs once you've had property damage. And then, like anything else in business, have a continuity plan. So, you know, identify the risks in your business, the critical areas, and how you're going to protect them. Just be better prepared. So, you know, when there's an emergency or you've got unexpected disruptions, it'll help minimize your loss. Mention here as well, so if you're a home-based business, you do need to make sure you advise your home and contents insurer that you operate a business from home. So depending on your activities, it could have an impact on your home policy as well. So obviously having a home office is very different to, you know, running a mechanical or a welding business out of the shed up the back. So very important that you do let your home insurer know that, because it can affect your property cover there. If they agree that they're going to continue that coverage, noting the business at home, ask them if they've got any cover for your business equipment. So quite often your home and contents policy will have a limited amount of cover for your business equipment. So then, depending on the scope that they're providing, you may or may not need your business property cover. as well. So refer back to that one. And keep in mind as well that most property covers, they are restricted to a single location. So if you've got portable items, we've all got laptops, mobile phones, you might have scanners, you might have tools. So you need to consider portable items cover for that sort of gear as well, if you want it covered away from your premise. All right. This is a bigger one. Lots to talk about here. So public and products liability, definitely not a one size fits all. So if you interact with the general public as a part of running your business, there's always a risk that an accident could occur and you're going to need liability cover. So at the end of the day, the unpredictable nature of accidents, it makes them hard to prevent, and the costs of being sued can be extremely high. If you're a sole trader, there's even more reason for you to have the cover. In the event of a public liability claim being made against you, your personal assets could be at risk. As a sole trader, you are personally liable for the claim, and there's no distinction made between your business assets and your private assets. And as we mentioned, working from home before, another thing to keep in mind there, home and contents policies, the liability under that does not extend to your business. Okay, so you're still going to need a business liability policy. Home liability cover, it will exclude anything to do with your business, profession, trade or occupation that's carried on by you. We've got two main factors when we talk about liability. So you've got damage to another person's property, or we've got injury or death to another person. The sort of things that it's going to cover, well, who's covered under the policy. So it covers you or whoever you've named as the insured, so the person, company or organisation. It also extends to your directors, your partners, your shareholders and employees of that named insured. What is generally excluded? Liability policies generally aren't going to cover the cost of rectifying faulty workmanship. Some trade policies do, but as a general rule, it's excluded. They're generally not going to cover damage to your own products. It's not going to cover claims by employees. It's not going to cover claims related to registered motor vehicles or anything to do with asbestos. Right. So what are the sort of things that are going to impact how much I have to pay for this liability cover? So premiums can start from as little as $300 and can go up to many thousands. So the main factors are going to be how much cover you need, the type of work that you do, the locations where you work, and any past claims, accidents or incidents. Okay, so how much do I actually need? I get asked this all the time, and there's no easy answer. There's no magic figure. There's no specific formula we can use. So it's really subjective to each individual. So I've come up with a few points that I thought I get my own clients to think about that they need to consider when they're setting those values. So first one, your business activities and your size. So thinking about the type of work you do, along with what are the possible compensation amounts that you might have to pay if something went wrong. What is the worst case scenario for personal injury or property damage from running your business? So, a small home-based business, you might be quite safe with $5 million. A larger business with more substantial risks, you're going to need 20 million or more. So it really comes down to those activities and size. Have a think about that. Contractual obligations. So under here, in business, we sign contracts. Have a look at those, your lease agreements or service agreements, those sort of things. They might actually specify that you need to have a minimum limit. So refer back to those. Shopping centres in particular. So even if you're not in there all the time, but you want to do a pop-up stall or something like that, most shopping centres are going to ask that you have 20 million in liability cover. So do keep that in mind. and also the long-term nature of the claims as well. So if there's a major, a serious personal injury claim, they take a lot of years to settle. I've seen them go 5-6 years and it's still ongoing. So you need to look at what value you set now. Is that going to be enough if it takes 5 years to settle your claim? What are the costs going to be in 5 years? So, $5 million might seem like a lot, but I tend to think that it's not in this day and age, not when we're talking about liability. So that's something we want to think about. And then also just with your occupation, there might already be some regulatory requirements around what you do and how much liability cover you need to be. So I think I've put the example in there of like Queensland electricians. So under their contracting license, by law, they have to hold a minimum 5 million cover and have the consumer protection cover in place as well. So just checking those sort of things. Yeah, so I guess they're the main points I think you need to look at and consider when you're setting your sum insured. Okay, so some other points to consider. So liability, it's not simple. It's so broad. There's so much to take in. So I've tried to condense this and make it as simple as possible for everybody, but cover off the major points. So your business descriptions. So the first thing is when you're setting up your liability policy, make sure your policy schedule accurately describes your business activities. At the end of the day, if your activities aren't listed, they're not going to be covered. So make sure you're comfortable that it covers off everything that you do. And insurers, they base their offer of cover on the activities that you've disclosed. If you don't disclose a business activity and a claim arises from that activity, a claim can be declined or reduced. And the insurer will base that on the fact that they were unaware that you did that, and had they known it, they wouldn't have offered you the cover in the first place. So be really careful with your business descriptions. Locations and activities. So there are certain locations and activities that insurers deem as high risk and won't be automatically covered under your insurance. So if you're doing that sort of work or whatnot, you need to let them know. So what are high risks? High risks, anything to do with explosions, demolition activities, work at mine sites, anything to do with defence, utilities, rail, ships, marine and aviation. So they're your main things in there. Also with the mention of aviation, be mindful of drones. So if you're using drones in your business, you need to confirm this is covered under your liability policy. Even these days, even though drones are becoming quite common, most liability policies will exclude the use of drones. So you need to specifically refer to it, see what the definitions are and ask the question, just make sure that it is actually covered under it. Commercial contracts, so another big one, particularly for trades. So be very careful when you're entering into any commercial contracts. It's very common for commercial contracts to contain insurance and indemnity clauses, and they allocate or transfer risk. So an example of that would be you're going to do work for a principal, but that principal then transfers all of their risk onto you out of the contract. By signing the contract, you're accepting liability that's beyond what your policy is designed to cover, and it leaves you very exposed. So you've got to pick up the gap. So in addition to seeking, assistance from your legal advisor, you need to provide copies of these contracts to your insurer or your broker. We need to check that the liability cover aligns with what your obligations are under the contract. So to the extent that the cover's not available, you need to understand where those gaps are and what risks that you're undertaking if you signed that contract. So I guess at the end of the day, with that one, I can't stress enough the importance of having your commercial contracts reviewed prior to signing them. So on that there too for consideration. So here at Piranhas, we provide our clients with access to a contractual liability helpline, and it's free. So it's run by Meridian lawyers. And what they do is, on our client's behalf, they will do a review on your liability, your indemnity, and your insurance clauses in the contract against your liability insurance policies. They'll also come back with any suggested drafting changes. So, and this advice, it's confidential and privileged. So it's legal advice that you then choose. It's yours to do with what you will. So you can take that back to your own solicitor, or you can engage Meridian to act on your behalf. So, but that's a free service. So just another benefit of using a broker, I guess, is that you get that extra support. Subcontractors and labour hire. So yeah, I guess a lot of us are using subbies these days, and it can be a really easy out, particularly if we have, you know, a sudden need to get someone in. It might be just easier to pay a subcontractor to come in and do some work for us from time to time. We do need to be aware, though, that it does bring certain risks and additional costs when it comes to your liability insurance. As a business owner, you can actually be held liable for the damage or injury that's caused by your subcontractors while they're performing work on your behalf. And you don't even need to have been involved in what occurred. So this is called vicarious liability. Your policy will protect you for your vicarious liability, but it won't cover the subbies themselves. So be very mindful when you engage subcontractors. They must hold their own liability insurance. Some insurers even impose conditions in their policies that you must obtain proof that your subcontractors hold this insurance prior to engaging them. And if you don't do it, you could be putting your own cover in jeopardy. So have a look at that. Always reach out to your insurer or your broker if you're considering putting on subcontractors or labour hire, and they'll just make sure that you've got appropriate cover in place for that. Run-off cover for products. Okay, so we're in business. Maybe we've finished. We just want to cancel it up and move on. It's not always that simple when it comes to liability insurance, particularly if you've got products in your business. Products being anything, you've sold, supplied, manufactured, constructed, erected, service, handled. It's so broad what a product is. Again, something you'd need to specifically look at under the policy that you took out. But where you've got products involved in your business, you need to potentially continue that cover on, even though you've finished up your business. The reason being, the products liability, it's covered under an occurrence base. So what that means, if you sell a product in January, that product then causes injury or damage in March, you need to have had a current policy in place in March when the actual injury or damage occurred. So not back in January where you sold it, it's when it occurred. So it's really important to consider that. And that just means you're protected in the future for any claim that might arise from past products or services that you've performed. And a lot of people aren't aware of that. So that was one that I wanted to just point out. Okay. Professional indemnity. So PI cover. So your liability, when members of the public make a claim against you for injury or damage, your public liability will protect you. When a client makes a claim against you for professional mistakes or negligence, that's professional indemnity. So traditional occupations we tend to think of, lawyers, accountants, engineers, real estate surveyors, health professionals, etc. Consider that these days there is a broader view of what's considered a professional and what what constitutes professional advice. So any business that provides expert advice or services should consider professional indemnity. So even businesses like photographers, arborists, wedding planners, beauticians, fitness instructors. So the way I try to simplify it down is if you deal with clients and they pay you a fee to advise them, then it's very likely that you need professional indemnity cover. Okay. What sort of things can it cover? So failure to provide your promised services. It could be negligence in rendering your professional services, incomplete or incorrect work, accidental errors or omissions, Could be a breach of privacy or a breach of confidentiality. So at the end of the day, and it could be alleged or actual. So if a client claims you made a mistake and you've caused them an injury or a financial loss, professional indemnity cover will cover your legal defences and then your damages that you have to pay. So we mentioned before about products liability being occurrence-based. Professional indemnity is claims made. So this is a different basis again. And this can be very confusing for clients. So just another one to try and put out there and just to be aware of it. So yeah, claims made, it means that you've got to have a policy in place at the time the claim is first made against you and notified to the insurer. So it has to be during the period of insurance. And this is regardless of when the actual cause of the action may have occurred. Now, be aware there's also what they call a retroactive date that applies to professional indemnity. So any services you provided prior to the retroactive date is not covered under your policy. So wherever possible, I was advised to extend that out to an unlimited retroactive date. So because of the nature of what a professional indemnity, how that claims made works, it does mean, like products, you need to have runoff cover in place for professional indemnity. You should never just simply cancel it, okay? Because you need to protect yourself in the future for past services that you've performed. So remembering you've got to have cover in place at the time the claim is made against you and that you notify your insurer, okay? Management liability. So I guess this one, it's still, the take up on it from clients is still quite low, but at the end of the day, anyone in business should be considering this cover. So it's probably still a little unknown to people, so that the benefits are up there. So I fly the flag for management liability cover all the time. So yeah, when you're running your business, there are responsibilities that come with it, and despite your best intentions, there can be breaches of laws and compliance. And when that does, you or your managers can be held personally liable. So management liability, it protects you and it protects the business, and it's from financial losses. Some of the things it can be, so workplace health and safety incidents, employment issues, tax audit or tax investigations, employee or third-party theft, and your actions as a director or officer. So any mistake that you make while managing your business. It applies to private companies, not-for-profits, sole traders, partnerships and associations, all alike. All are exposed and all should consider the cover. So management liability, at the end of the day, it protects you and it protects your managers so that you're not putting, your personal assets at risk to fund legal costs if something goes wrong. So yeah, on screen there, I've just got some of those examples. Feedback from insurers, they report that the most common claims they see are actually for employment practices. So things like bullying, harassment and wrongful dismissal. So particularly something to keep in mind, this sort of cover, if you've got employees, just an extra reason to consider having that management liability policy in place. And it does protect you from start to finish. So it covers your defence costs, it covers your court attendance costs, investigation fees, and once the claim is finalised, it covers your settlement or any civil penalties that are imposed. Except, of course, anything that's been unlawful or dishonest and fraudulent conduct, that sort of thing. So obviously that's not going to be covered by insurance. And I've got a couple of real life examples here. So on the screen, these are actual claims that have been handled and settled by Berkeley Insurance. So just to sort of reiterate the different sort of scenarios from what a claim can arise. And I think most of those things particularly workplace health and safety, that it applies to every business. Okay, another biggie, and particularly with COVID, it's gone absolutely stupid, the cybercrime space. So, and I find that a lot of small businesses believe they don't have to worry too much about cyber cover. And I think that's a bit of a myth to believe that they're only going to go after the big companies and they're not going to come after you. So while they do target the large organisations, they also realise they've got the resources to spend big on cybersecurity, and often it's a lot quicker for them to get, get $1,000 from 1,000 small businesses rather than trying to hack a larger business and go for the $1 million payout. So, and unfortunately, we generally only hear about the big attacks, the sensationalised stuff that we see in the news. So, and behind the scene, we've got millions of small businesses every year being targeted. Everybody who's got a computer, a smart device, mobile phone, iPad, anything like that you're using for work purposes can be a victim of cybercrime. What is the cybercrime? So it's essentially anything arising from a computer or device, but it can be, identity theft, cyber stalking, the use of malware and viruses, computer and network hacking, and online scams. The two main cyber crimes that businesses should worry about are ransomware attacks and breaches of data breaches. So a ransomware attack, so that's where they get in and they encrypt your files. It just renders them useless, and as a result, your business, if you rely on those records to run your business, everything stops. You've then got to pay them money to unencrypt them and get access to your data again. So the issue with that, obviously you've got those response costs and everything, but it's your cash flow. So everything stops, and then yeah, it's everything that runs off the back of that. The average demand for unencrypting files is currently sitting at around $1,000. So, and I think that would obviously vary of the business that they're targeting. In the case of a data breach, they'll steal your data. So think things like your clients' addresses or bank account details. And what they do then, once they've got that off your customers, or it could even be your staff, so if you've got staff information on your system, they then use that data for identity theft, fraud, and extortion. And there's also been some changes as far as reporting from a business point of view when you've actually had a data breach. So in the past, if you failed to safeguard the personal data that was entrusted to you, you really only had to worry about, reputational damage or the consequences if it came out that you actually had a data breach. Bit different these days. The federal government brought in what's called the Notifiable Data Breaches Scheme. And under that, you are required now to advise individuals if you've been hacked, and there's potentially a serious harm that could come from that hacking. So if you fail to comply with the scheme, you're going to attract fines. But when you do, you're then opening yourself up to potential claims from your clients because now, their information is out there. At the very least, it's going to cause some potential, reputational damage. So there'll be a loss of trust and could impact your business in the future. Even if we've got all the right systems in place, your business is still at risk. So, we know major banks, governments, even Google have all fallen victim to cybercrime. So it's going to happen to them. Unfortunately, we're all at risk. Right, so there are some things we can do to help protect ourselves. So some of the basic things here. So, putting on there your antivirus, secure data backups, that's a biggie as well. So always make sure you've got those data backups and offsite. And that's just good management as well from the property side of things. So if you did have a fire and that sort of thing, you've got your data and you can just get back up and running. firewall technology, encrypting your data, and having some policies in place around devices, particularly if you've got staff and you've got staff bringing their own devices into the business. So just making sure, have training around it, awareness and that sort of thing. The biggest exposure when it comes to cybercrime is people, the people factor, so we click on that one link, or we accidentally sent that email to the wrong person and that sort of thing. So we can put all these policies and procedures in place, but at the end of the day, we're human and human errors will occur. So having regular training and with your staff is a really good idea. What else I got here? So if you do choose to take out the cyber insurance, what are the sort of things that it's going to help you with? So yeah, as we've got up on screen, so a reduction in your business income. So as we said, if they get in and they cause system damage or they've encrypted your files, business will come to a halt. So this is going to cover your loss of profits during that time. It'll cover your response costs and the support and getting back up to business. And that's a really big thing too, particularly if you're not a larger business and you don't have IT professionals that you're using, because you've got these qualified people that are coming in. They do this every day. So they're on your side. They'll get in there, they'll get it sorted, and professional public relations and crisis management assistance as well. So they'll handle all of that for you. Your protection against third-party liabilities, and that's, as I said, like your clients, the data goes out there, it's claimed there's a breach and someone wants to sue you for that, or because a malicious file came from your office, so they're now suing you because of the damage that it's caused in their business. Financial losses as well, so cyber theft, identity theft, telephone phreaking and cryptojacking. So funds, basically, if there's funds stolen from that side of thing, telephone phreaking, so where they actually jump on your phone line, the first thing you know about it is you've got this $20,000 bill from Optus or Telstra or whoever it may be. So that happens, and cryptocurrency, that sort of thing. Socially engineered theft, they're pretty crafty these days at how they're going to get to your funds. So it could be a simple case of the person who normally, gives authorization for payments to be made and that sort of thing is away. They can jump into their emails and actually send emails from that person to accounts and ask them to transfer funds to whatever other account. So they play you, basically. It's exactly that, from a social environment. And then physical damage to your IT equipment, so property damage, lost devices, that sort of thing, can also be covered under a cyber insurance policy. General costings, an entry-level policy is going to be around $300. A more comprehensive policy with your social engineering and your cybercrime included in it is more likely to be starting point around $1,000. And that's it. Right, so try to condense as much as I could, but get as much information out there. Hopefully they haven't overloaded anyone too much. So I guess from my side, I just had a couple of points just to bring home on that. So the main one being your reviews. So, just making sure you're regularly reviewing your cover. Don't just set and forget. Have a look at it every year, or when your business circumstances change, make sure you're communicating with your insurer or your broker to keep it updated. Pay attention to those details. So if something doesn't look right, query it and have it rectified. And invest the time and the money and effort into managing your risks. At the end of the day, insurance should be your last resort. It's your backup when everything else fails. Just having a look at your risks, identifying them and trying to manage them. And then, if ever in doubt, seek out a broker.
Awesome. Thank you so much. That was excellent. I'm a bit concerned about the cyber crime, to be honest, after your presentation.
Well, and to mention here as well, and I probably should have put that in there, but an insurer we deal with, Emergence, they've actually just brought out a personal cyber product as well. So nothing to do with businesses. So just for mums and dads and families. And it includes things in there like, cyberbullying, so you can seek help and get assistance with all that sort of stuff. So it's just a part of life, isn't it? Unfortunately, these days.
Yeah, I think that's exactly right. I think if it's just part of our new modern life. But it's something that you would hope isn't there, but it is there. It's just reality.
Yes, yes.
So we have several questions, Nadine. Thank you so much for presenting. It was really awesome. I'm going to start asking some of the questions that was logged in the chat. So if you're on this call with us with Zoom, please feel free to log some more questions in the chat. Or if you prefer to speak, you can unmute yourself and just speak. You can also raise your hand with the reactions at the bottom. If you're watching this via Facebook, please feel free to add a question in the comments and we'll be asking those questions too. So we'll just start at the top. I'm not going to just go in the order that they were asked, if that is okay. Yes, so you mentioned before to review and to the replacement value was a thing. So the question is replacement value the same as reinstatement value?
Replacement or reinstatement, yes. So usually that's how the insurers will word it, is replacement or reinstatement.
Okay, awesome. Yes. The next question is, can you please discuss what will happen if you're overinsured, or what to do with overinsurance?
Yeah, so with overinsurance, you're going to be paying additional money that you'll be paying additional premium for cover that you're never going to see. So if you lose all your contents or your building burns down, they're going to assess it. They're going to send it out to tendering and get values of what it's going to cost to replace it. So if you had insured it for $500,000, the actual reinstatement replacement value is only $300,000. That's all you're going to see. Yeah, so and that's why using qualified valuers is a really good idea, because underinsurance is a problem, but so is overinsurance as well. So there's no point overinsuring, because you'll never see those funds. You'll just be paying extra premium for nothing.
Okay, so just to link back to the question before about replacement value and reinstatement value, the question was asked because the valuer has come back with two different valuations, one for replacement value and two for reinstatement value. Can you shine some light on the difference?
Oh, without having, I'd need to look at the valuation specifically and see exactly what they've laid out as their cost, what they've included in it. So valuers, they can vary in what information they will include and how they lay them out. So I would want to look at that individually and discuss it with the valuer just to be sure exactly what's included in it.
Okay, cool. I asked a question, but I think you answered this question after. How often should you review your insurance?
Yes, so absolute minimum every renewal. So never just roll your renewal, never just set and forget and pay your bill every year. So definitely review it every year. And other than that, when things within your business change, so you might win a contract, or you might purchase some new equipment or move address, that sort of thing. So anytime there's a change of circumstances within your business is a good time to sit down and review your policies. Yeah.
Okay, excellent. So Tess is one of our members at the Smart Hub, and to be one of our members, resident members, the council requires that you have $10 million in personal liability insurance. So her question is this: is a policy more expensive due to working from a joint office space, such as the Smart Hub, compared to working in your own private office?
Not necessarily. If you're just talking about the liability cover itself, then no. If you're based in Rockhampton and you're a handyman or whatever your occupation is, regardless of whether you're in the office or at home, the liability cover will be the same premium. So the only thing that would be impacted by those different locational setups would be your property insurance, because it's going to be based on, the age and the construction, the security that you have at whatever location. Yeah.
Okay, excellent. The next question is, if you sell a business, do you still require run-off insurance for products?
I would generally say yes, but definitely a question to go back to your legal advisor and question that with them. So it can depend on how they've actually tidied up your end of business. So yeah, it's definitely something I always raise as an awareness, particularly if it's a sole trader that just stops trading. They just go, oh, look, it just wasn't making as much money as what I thought it was. So I'm just not going to do it anymore, cancel my policy. That sort of scenario, I would definitely say to them, well, you need to consider if something arises from past work that you did. But if it's a company and yeah, depending on how it's all been tidied up and finalised. So I would refer back to your solicitor for that one.
Okay. So another question leading on from that is, how long do you need to continue insurance cover after the cease of business?
How long's a piece of string? So yeah, who knows? And again, a good one to have a chat to your solicitor about. And it can depend on the type of work and the type of products that you're involved in as well. So, obviously a baker, your goods are going to be very limited in time. Whereas if you're a tradesman, even just a handyman, so, a fixture that you've done, it could be in 6 months' time that fixture fails and falls on someone's head. So it really does depend on what you're doing. And then as well, from a solicitor's point of view, how long people have got to make liability claims against you and that sort of thing. So I would refer back to your solicitor on that one. And there could be contractual requirements as well. So we do see that from time to time, where under contract people are required to maintain their cover even after they've finished the works for so many years or months or whatever it might be.
Cool. So another question, can you have professional indemnity cover with two different insurers, i.e. business cover with professional indemnity and professional association cover?
So do you mean to have your liability with one insurer and then your professional indemnity with another?
I think Merv, if you can correct this, but I think what you're asking is, what if you belong to a professional association and as part of that membership, you are covered, and then you also, on top of that cover, have professional indemnity cover with a different insurer. So essentially, you're covered twice from two different insurers.
Oh, okay. Well, you're not going to get paid out twice. I'm not sure why someone would do that. I'm not sure of the intent of that one. If you're deliberately taking out two policies to cover the exact same risks, or if there's a gap in one, perhaps the association one, there could be some terms or conditions in that you're not comfortable with, that you want picked up under another policy.
Yeah, so Merv is saying correct. So different risks covered in different policies.
Oh, okay. Yeah, well, that would make sense. Yeah.
Cool. Okay, let's go to the next. So that's okay. If you have two different risks, two different insurers, that's okay?
Yes.
Okay,
yeah, because
perfect.
they're covering different risks. Yeah. And that can happen as well. So where we've got people that have multiple parts of their business, they find the bulk of it might sit with insurer A, but there's a certain part of it that insurer doesn't like, and we have to insure that through another insurer. So that can happen even for the same business. Yeah.
Right. Okay. So the next question is, does management liability insurance cover industrial manslaughter?
No idea. That's something I'd need to refer to a policy wording and have a look at. That's not a term I'm familiar with, so I would definitely need to have a look at the policy wording and refer to an insurer for that one.
Okay. So another question, what is the difference between $300 and $1,000 cyber insurance? So
yeah, so the main difference is the very basic starting point one doesn't include the social engineering side of things. And that is a growing point. So I would usually recommend, or at least always quote to a client where it's got social engineering included in it. And also it doesn't include the cyber theft of funds, so the crime side, but it will cover everything else. So, if you get hacked or there's a breach of privacy and that sort of thing, you've still got some basic cover in there, but it doesn't have those optional covers, the extra covers.
Okay, excellent. Tess asks, I'm covered by an association. Is that all I would need? Tess, are you talking about, going to scroll back to your previous question, are you talking about professional indemnity or public liability? What is covered by the association? Just let us know. I'll check your comments on Facebook too if you're on Facebook. Okay. I want to ask a very unfair question. And I know I'm anticipating the answer is it depends, or I don't know, because it's that kind of question. But from what you've explained today, it looks like insurance has to become a very important cornerstone in your business. And it is
absolutely.
And am I right to call it an expense? Even I'm not talking about profit and loss, of course it's an expense, but it's not, it's an expense in your business that's necessary.
Mm-hmm.
But it's also an expense that doesn't end when your business ends.
Not necessarily,
right?
No.
Yeah.
Depending on what your business does, then no. Yeah.
So my question is, when we're thinking about getting into business, or when we're thinking about getting out of business, what kind of questions should we be asking, and what amounts of money should we be considering around insurance? And I know that depends on the business, but can you give us a bit of a ballpark?
Oh, it's really coming down to those products and the professional indemnity side of things. So they're going to be those main costs. So, and it's the runoff for that. So yeah, it really is such an individual thing. And depending on what your setup was in the business, and then how that's actually been finalised. So yeah.
I know. I'm sorry. I have to apologize, because it's an unfair question. I do appreciate that. But I think the point that I didn't realize, that was made extremely clear today, is that the policy, if I hold a policy today and something goes wrong today, but it's not realized until 3 years from today, even though I was covered today, if I don't hold that same policy in 3 years' time, today's cover doesn't apply to today, which I like that. Look, would that be a clear summary?
For professional indemnity, that's exactly the case. So it could be, I'm in business today and I've just made a mistake on something. You know, I walk away from the business next year, but then in 2 years' time, it comes to light that error I made today has now been, you know, raised, and a client has come back to me and made a claim against me. Yes, if I don't still have my PI cover in place, I need to have it at the time that I'm actually made aware of the incident, and I need to be able to notify it to the insurer within that time. So yes, that's right. So for something that happens today, you need to future-proof yourself. Yeah.
So basically, you're never actually covered in the time frame where you buy the cover for. You're buying cover retrospectively.
For when you actually become aware of the circumstances. Yeah. Yes. So that's for professional indemnity. The products liability one, it is actually when the loss occurs. Yeah. So it could be you sold it. You know, I sold it this year. The item, you know, it defects next year. I need to have insurance in place next year when that item defects, for any cover to respond.
Okay, so Tess then added, would I need to get additional professional indemnity insurance if I start pivoting and doing additional services? Noting that just before that, she said she's covered by an association.
Potentially. So depending what the association is going to pick up, whether there is a professional indemnity component included under that. So you'd need to have a look, what covers provided by that, what activities you plan on doing, and what falls outside of the association. So yes, you may need to get an additional policy to pick up the gap.
Wonderful. Nadine, and with that, we've come to exactly 1 o'clock. You've
Oh,
covered
look at
a
that.
whole hour. It goes really fast when you get on a roll. Thank you so much for your time. Thank you so much for sharing all of your experience and knowledge. If you want to reach out to Nadine, she's at Piranha Insurance Brokers. So please feel free to reach out to us and we'll connect you, or to reach out to her directly. We really appreciate your time and sharing everything that you know with us. And thank you everyone for watching today. It has been a really, really great lunch and learn. And please join us again in October. I can't believe our next lunch and learn will be in October. Soon we'll be doing December and Christmas. Time's just flying when you're having fun. So that's good. Thank you so much for joining us, everyone. We'll see you again next month.
Thank you.